All right, so ladies and gentlemen, I want to welcome. You said how you doing? I know how you doing. 777. Okay, so I am a master trader in all my trades end in profit. I am a master trader in all my trades end in profit. Do not forget, I am the signal. I am the signal. I am the signal. So, ladies and gentlemen, also what I want to do is I kind of want to highlight, I know I put something out there, but I definitely want to highlight what we have been seeing in the market right now. We have been seeing a lot of fundamental analysis, right? There is a coronavirus out there, and the market dropped 1,000 points yesterday. We're talking about the Dow Jones specifically. And now all markets are down across the board. But when we're looking at the Dow Jones specifically, 1,000 points yesterday, 800 points today, 1.7 trillion lost in the stock market. That is something that, we're in a good position as traders. Okay, we're in a really, really good position as traders. People who have invested, you probably see it posted all over Facebook. People are spazzing out. They're talking about the economy. What about my retirement account? You're in a good position. And so tonight, I kind of want to help you understand that, because if you understand how to ride the wave in the market, you understand how to trade it. So a lot of you all should have done some great things trading today and yesterday. So I know I already see 1777 in the chat. You cashed out today and yesterday. We're gonna get a 777 in the chat. I got a sure did with that 777. Got a sure did, I saw somebody that actually said they made their income from their job, on the 2 calls this morning. So, that's the significance of what being, you said several times, right? And see, that's the significance of what being your own bank is all about. That's really what this is all about. That's what this movement is all about, and understanding what this is. So I'm gonna share something with you. Let me get this so I can share this with you, because I want to talk to you about the different types of analysis that we have. And this is what Market Talks is all about, right? This is what Market Talks is all about, and this is what you're experiencing right now. BYOB Market Talks. So what you see right there, okay, what you're looking at right now is you see what's called technical analysis. Now, understand that technical analysis is identifying a trading opportunity. That's identifying the price action, the price movement, the volume. That's the strategies that we utilize. That's what technical analysis is. That's the marking up of the charts, right? That's what we do as far as technical analysis. That's when we identify our trends, our support and resistance, our price action, our time frames. So that's really what that technical analysis is. So now, when we are actually looking at what fundamental analysis is, that fundamental analysis is, just going back to technical analysis. Technical analysis also helps you understand that the market really just does 3 things. I mean, it literally does 3 things. It goes up, it goes down, it goes sideways. And when you use your technical analysis in a perfect day and in a perfect world, it's just identifying the entry point and the exit point. That's it. That's what the technical analysis is. It's about how to get in and how to get out of the trade. So that's how you mark up your charts. That's in, like I said, that's the BYOB cash out. That's what we're analyzing the charts. We're the predictability of the movement of the charts. Then you have what's called fundamental analysis. So you'll hear us on the call talk about the fundamentals, and you'll hear us talk about the US 30 is, is heavily influenced by fundamentals. And that's because it's comprised of companies. So whether you're talking about the US 30 or I'm talking about the NAS or, the metals or something like that, you're going to have fundamental analysis in there. And you're going to have that because it's influenced, by factors that influence the price. So external factors, like the economy, as you see on the slide. So you talking about central banks. So if the banks move the market, so when you have something like that happen the other day when Apple, for example, Apple kind of I won't say they started it, but Apple is one of the first companies that made the announcement that they literally acknowledge the fact of the impact that the coronavirus is having on business. And then you got behind that, China's not releasing reports, quarterly reports. And, once companies, other companies started to follow suit behind Apple, and you started to see the market start to drop on Friday. And so, I kind of mentioned it at the expo this past weekend that if you were in a sell already and you held it, expect the market to open with a gap. There was an expectation that the market will open with a gap. Now, also, what I figured, and when I looked at the charts, I said it was going to be about a 650 point gap. And it actually ended up being 1,000. So it was more than that. Just a drop. The gap in the market opening in a gap, the gap actually ended up being about 200 points or something. And that's because if there was any news over the weekend, which it was, with as far as the coronavirus and the spread and the impact to companies, things of that nature, that this is where we're talking about fundamentals. So you have a lot of fundamentals that take place. So when it's something that's not this significant, a fundamental can be those economic releases, those red folders that we see and that we check for every time before we trade. That's why we check our red folders. You can kind of see little news spikes in, those little news spikes that kind of happen when Brexit was going on. I think that's been pretty much the most significant fundamental up until this point that that we really had to deal with, is how Brexit kind of moved the market and the election that they had. So, what about the end of the calendar year? So when companies are releasing their quarterly reports. So those types of things are fundamentals that can move a market. We'll typically see, okay, I got a 100-point spike, or, a 50, I'm saying point, but on the Forex pairs, it'll be pips, but you kind of see the spike, then you see the market correct itself. So those are the fundamentals. But what's important is the sentiment. The sentiment is how the trader feels about the market. And when I say the trader, we're not talking about you, because we don't move the market. We're talking about the banks, right? We're talking about the banks. We're talking about the ones who actually move the market. When you're talking about a bank needing a $5 million minimum, to get into the market and things of that nature, and you can start your trade account with $50, you obviously can't, based on your broker. So, you obviously can't move the market. We ride the wave of the market. So this is why we have to trade non-emotional. So if theirs is 5 million, they obviously have enough impact in funds to move the market. So how do they feel about the market? So when you got China, where you're talking about third in GDP and having that much impact in the market, a lot of companies do business over there, and it's shut down, and it's having that economic input. It's hitting us economically, and you look at everything that's happening. This is why the market is reacting the way that it's reacting, because how do investors feel? People actually want to move their money. They want to pull their money. They want to take it out of their account. So now you see 1,000-point drop, 800-point drop, so we got these drops that are happening. And so you have all these different times, so how do they feel about the market? And so it's really, really important when you're trading, you know, we say have no emotions in trading. It's really, 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 really important that you trade non-emotional and you really understand what's going on, because this is how you walk out in profit. And that's why you can see people dropped in the chat, you know, hey, guess what? I just made my monthly income, or I today, this morning, or I made my weekly income, or I did this. You know, I did that because they moved their emotions out of the way. They traded from a non-emotional standpoint. They put their mindset in the right position. You know, they learn the skill set. Technical analysis is very important. You learn the skill set, and then you actually apply it and you pay attention to what's going on. And that's why you kind of have to filter some of those things out. So, you know, not a political statement, but the debate is happening right now. And when we say filter those things out, what do you think they're talking about? They're talking about things to move you emotionally, you know. So you have to remove yourself because you've made a decision to walk in a completely different mindset. You've made a decision to walk in a completely different arena, to walk in wealth. And if you're going to walk in wealth, you have to think as wealthy people do. You have to act as wealthy people do. And you can't be moved by emotion. And so because of that, you know, this is where you filter those things out and you pay attention to the financial news and you pay attention to those sorts of things. And when you do that, that's how you cashed out today, because, you know, you are non-emotional. You're not being moved by those things. So before I transition to the charts or transition to any of that, do I have any questions on any of that? Any questions? Okay. And okay, so let me try. All right, so let's see here. Y'all bear with me. This is a little slow over here. So I have the US 30 chart up. So let me try to share this screen with you guys. Now, looking at this, okay. So let's look at this screen, okay? Let's look at this screen right here. And it's because this is so significant as far as what happened. It's probably the most extreme, one of the probably most extreme cases you're gonna get at. But you know, look at this, okay? Look at this. And you know, it's normally not this extreme, but this is the daily chart. So yesterday you're talking about 1,000 points, okay? Today you're talking about 800, and this, so you're talking about the 24th, the 25th, the 26th, and then on the 21st our drop started Friday. So when I mentioned that, you know, Friday we had a slight drop, and so I was like, if you held a trade over the weekend, you know, which we're talking about 400, right, a little over 400 points or something, you know, so we really technically been dropping since Friday. And I said, okay, if you were in a trade over the weekend, or if you closed out in a sell, if you held a sell, it's going to open in a gap. Now, if you see a drop like this, and this is where I want you to start thinking, because, you know, you have to understand fundamentals as much as you understand technical. And you have to, because, okay, like right now, let me go down to the 15. You know, I saw some things where, okay, if I know that I'm on a support and resistance line, right? This is, look at where this drop is, okay? This drop is right here. See, look at that. You see that negative 1,000, and this is what was lost, right? So let's see here. So if I'm sitting on a major support, okay, I'm sitting on a major support line right there. Okay, that's a major support line. Now, you can kind of see the support line. So you know, we've had training on support lines. And what I didn't ask is, if you're new to this call, this your first time on this call, let me get a 111 in the chat. I kind of like to know who's on the call. And if you're still learning to cash out, let me get a 222. Welcome back. Welcome and welcome back. So welcome. So now, so what you're actually seeing right here is we've trained and we've talked about support and resistance lines, okay? And for those of you all who indicated that you're new to this call, you're probably gonna have to go back. Let me make sure this is muted. You're probably going to have to go back and watch some of the support and resistance, or as you go through the study material, you're gonna have to understand the support and resistance lines. You know, I feel that that is a lifeline to trading. It's not the BYOB cash out. I will go over that and helping you understand the strategy toward the end, or as we go through this, I definitely will cover the strategy, BYOB cash out, because I want you to see that. But what you see is this is a support and resistance line. Now, what I want to highlight though, because I did try to stop some people from buying in the chat, because in the Telegram chat, because if we're talking about as much fundamentals as we're talking about right now, and you see how it's riding this support line, every time you get to a support and resistance line, this is your checkpoint. This is the market is going to pause. It is going to pause. It is going to halt. If I look at, I just showed you the significant drop that we had. If I go back to my daily chart, and I will put a line at the top where it started from, okay, we can kind of see where this started. You know, it kind of tapped around it at the top, but you can kind of see where this drop started. And I come back down to my hour, okay? You know, I come back down to my hour, you can kind of see how it's been in a steady decline. And let me move the stochastic for right now so I can get more space to kind of work with you guys. So even in this steady decline, okay? Even in this steady decline, what you're seeing is you see corrections that happen in here. And where they happening, I'm gonna change the color of these. So because, I'm gonna change the color of these so we kind of keep them separate. They're happening at support and resistance lines, right? We have support and resistance lines in here. You're always gonna have them. That's why I call them your lifeline, okay? You're still gonna have them. I'm not gonna mark up every last single one, but I'm gonna identify them because I definitely want you to be able to identify them as well. So, but then this one was a major one, right? This was a major one because you saw how many touches it had over to the side. This didn't have all of that. This was a major one. So, it had quite a few. So when I'm looking at this and I know that I get here, this is gonna get a little more resistance to push through. You see how much resistance this one got to push through. Okay, now, the reason I'm pointing this out is because even though this is an indice, and we know with this being an indice that, just like, okay, we talk about GBP on here and under normal circumstances, that when this turns around and it corrects and yes, it went up, oh, okay, that's 180, this is, oh, look how many points this is, it's such and such a point, so it's 30 points, I can grab 10 points here, I can do this, I can do that, right? I can go scalp this. We've learned how to scalp it on a 5-minute chart. We've learned so much. But when you have a drop like this where the fundamentals are controlling the market, I don't know how many of you all were in the market earlier. And, and I can't remember what time it was, but it was twice today that I saw myself where, we got in a trade and the price just started jumping. It just started jumping. And, with this being an indice, it will move like that. And so, the price just started jumping. Give me a 555 if you saw that. You put the trade and it just started moving real fast. And it's nothing to be alarmed about. And that's why we're talking about it. You know, it's nothing to be alarmed about. But when you know, this is why I said, no, stop buying. Why would you be buying right now? You know, the fundamentals are too strong. The fundamentals are too strong. And when you have fundamentals like that, you don't want to buy against the fundamentals. You don't want to trade against those fundamentals, because yes, while it went up, you know how fast it could have pulled back down on you, because we are in a sale. We have fundamentals so strong that's pulling this market down. You have people dumping money. These are companies. This, you know, this isn't a currency pair. These are companies, even though the currency pairs are going through their own things right now too. But these are companies. And so you want to trade with proper risk management. As tempting as it may look to take a buy, you got the perfect setup. As tempting as it may look, you want to trade with proper risk management. You're not missing out on any money, because there's plenty of money to be made. It's $6.6 trillion in this. $6.6 trillion. So it's plenty of money to be made. So you want to trade with proper risk management, and you want to understand what's happening and what's going on. And what's happening and what's going on is the market is plummeting. So it's absolutely no way right now I will buy anything. You know, it's absolutely no way I will buy against that until you know it's some relief in the market. Because if you saw that shake and that shift, and okay, because what you know is it's hanging around the support and resistance. Look at what it's doing right here. Look at what it's doing right here. Look at what it's doing right here. It's hanging around. And even though it's in the fundamentals, it still got some technical going to it. Because if you know anything about the technical, it kind of does this little measure move and then it drops. It does this little measure move and then it drops. Where does it do its measure move? It does. So anybody know market structure, right? Anybody know market structure? When it does that little sideways move, then it drops. And that little sideways move is caught in between the support and resistance line, and then it's gonna drop. So, you know, you wanna kind of pay attention to that as well. So questions, comments on any of that so far? Oh, you're welcome. I mean, yeah, because if we were not in such a strong, I mean, if we were not in such a strong, oh, and it was a private. So the comment was, thanks for explaining why there isn't a buy. So, oh, you're welcome. You're welcome. Now I'm going to explain what the BYOB cash out is, right? I'm going to explain what the BYOB cash out is. We're going to get there. Tonight is training. So, you know, I just wanted to go over the different types of analysis, you know, because we have such a, I wanted to go over the different types of analysis because of what's happening in the market right now. And I know a lot of you all might not know the different types. And so this can actually put you in a high position of profit when you understand the market. You know, when you really understand what's happening in the market, it can really put you in profit. So you roll with the market. You ride the wave of the market. So definitely want to keep you in that position. Oh, you said it's the money spot. Hot. Yeah, you know where it's going when you have that sideways motion. So you still even in its fundamentals, you still see some technical, right? Even in its fundamentals, you still see some technical. So I mean, you still see it. You see that little, and so right now what you see is it's pushing. So it's riding this little wave. It's hanging out around this support and resistance line. It's hanging out around this support and resistance line. And you can kind of see it's a little bit below it. Like if I go, and remember support and resistance is, yeah, the market does talk. The market is talking. And you can kind of see, like if I come here, I probably should have went up a time frame, trying to slide all the way over. Right? You see kind of where it kind of hit. So you can, I mean, you can kind of see where it does. So you can see how the market tapped, but you can kind of see how the market look like it is, that was on the way up. And you can kind of see how it's starting to push below it. I wanted to kind of, yeah, you can kind of see. And then if you look, you can kind of see right here where there's another area right here as well. So if I do right here, put another one right here, where you can kind of see where it was hanging out over here as well. The BYOB cash out, we're gonna go over that in a little bit. This is what we're turning on right now. I'm going to go over the BYOB cash out. So and just I don't know if you dropped the 111, but the BYOB cash out is the strategy that we use. That's the strategy that I created. That's the strategy that we trade. So no matter that's how we enter and exit the trades. And I'm going to explain that. So now you can kind of see, since I dropped that other line and you saw how it was hanging out on the other end, you can kind of see how we're kind of entering another measured move, and it's doing that same thing. And so you'll kind of see you fluctuating a little bit. And if you're in a trade right now, let's just say you happen to be in a trade at this moment, your trade is probably doing the same thing it did, where it's bouncing around and bouncing around and bouncing around. And you kind of see it fluctuating where it's going up and it's coming back down and it's going up and it's coming back down. And then what's going to happen is just going to break out and it's going to drop. And so you don't want to buy, like, how do you know when it's going to pull out of there? You know what I'm saying? So like, how do you know to do that? So all right, so, and the question is how do I explain the how resistance is identified? So these lines that I'm drawing are identified by touches. These are support and resistance lines. And every time you see the market pause, right? So it's they're the same line. Support and resistance is the exact same line. It's just that if the market is moving down, it's a support line. If the market is moving up, it's a resistance line. So it's the same line. It's just what side of the line does the market hit it at? That's the only time that's what makes it different. I mean, that's it, because it's the exact same thing. But if the market, so no matter what, no matter how far we go back, which is probably not good to try to identify it on indices, because it's just, this is like literally since it's been put on here, it's literally just been going up, right? Since, it's just been going up. So since we've been able to trade it, it's just been going up. So but it probably do better on a currency pair. But every single time that you see a point where the market pauses, right? Every time you see a point where the market pauses, that's actually a support and resistance line. That's how you identify your support and resistance line, because the market always stops at the same spot. It always pauses in the same area. That's the typical area where these orders are being placed. So that's really what it is. So, and no, I use my higher time frames. Now, what I'm going to, I can tell by some of these questions, though, that some of you all have not been through the academy. And so I took the stochastic off. I can just for the sake of showing this, I can tell though by some of the questions that some of you all have not been through the academy. Now I am going to redirect to the academy first because that's very important. You know, you have to go through the academy and get the basics of what trading is. So, you know, it's a very, very, you know, those fundamentals are very important, the fundamentals of the education. So we always want to start there. And then we build from there, because if you've never had that experience, it's just like going to college, right? So whenever you go to college, you begin with your lower level classes. And you begin, I mean, you start, you know, your freshman orientation, your one-on-ones, you know, you always begin with those lower level classics, your basic maths, and then you build up from there. So, and what this is, so you're gonna go get your basic level courses out of the academy. That's going to give you like, what is Forex, history of Forex, what am I trading, understanding a buy, understanding a take profit, you know, understanding support and resistance lines, right? All of those basic concepts are in the academy. So that's very, very important for you to begin there. And then when you come here to the BYOB cash out, this is your specialized course. This is your advanced course. You know, because now, you know, this is where you're headed, because you made a decision that this tailored your personality, this strategy and BYOB tailored to you. So because of that, you know, just like if you were going to school to be a doctor, you know, you would still start out with your basic level courses, but then you would gear off toward, you know, your medical courses based on your specialty. So now that's what BYOB is. BYOB is your specialty. BYOB cash out is where you got your foundation, but now you're over here getting your specialized training. So you cannot negate your foundation and jump straight into your specialized training. So some of your questions, you still have to navigate back to the academy to get your foundational questions answered. And then, because this is your advanced specialized training, you cannot skip that part. So I definitely want to highlight that. You have to start at that foundation. And what is the stochastic doing? So while it's in this, and to answer that question about the stochastic, while it's in here, and if you're a guest, I'm gonna tell you to go ahead and get enrolled with the person that invited you out. I mean, you have to go ahead and get enrolled so you can begin. So stop watching us drop a 777 in the chat. So no, it's still okay to ask a question. It's definitely okay to ask a question, but what I'm saying is some of those questions, it's just very obvious that, you know, that the academy will answer some of those questions, but please ask your questions. So now what the stochastic is doing is the stochastic has to cycle back around. Okay, the stochastic has to cycle back around. So even though we're in this drop, the market still has to cycle. And so what you're looking at right here is you can kind of see, you know, you can kind of see where we're in this area right here, and you can kind of see, like, even up here, if you look at I can't answer how many points a pullback happens. It's just gonna be based on the market at that moment. It can be, I mean, it can be 200, it can be 10, you never know. So if I'm looking right here, right, see, kind of look at this measure move that we were talking about. Why did it come up pink? Okay, so if I'm looking at this measure move right here, right, you see how we have this measured move. And so with this measured move, what you have is you can kind of see what a stochastic had to do its cycle. And so after the stochastic finished its cycle, then the market dropped. You see how it dropped with that? And so now look where we're at right again. We have a measured move. or, you know, you're at the beginning. So, you know, to kind of answer the question on what is a stochastic doing, you kind of have the stochastic that is coming up again and is beginning to do its move, right? So we have the stochastic doing its move, but while it's doing its move, because the force is so great, like when I go up on my higher time frame, the force is so great on my higher time frame with this push down, it's not allowing it to move up. It's not allowing my lower time frames to push up past this point. So if you see it, this is how we end up with the measured move. Okay, kind of makes sense to you, right? This is how we end up with a measured move. So here my it's straight down. You see the force, then you kind of see that force. That's this push. I come to my 4 hour. You can kind of see the 4 hour. My stochastic is flat line. On my hour, what do you have? My hour is trying to push up. My 15-minute is trying to come through that cycle. My 15-minute has actually come up. You see, my 15-minute has actually come up. However, with my 15-minute coming up, right? You see, my 15-minute has come up. Okay, my 30-minute has come up. I mean, my 30-minute is coming up. My hour is trying to come up, but all of them did this before here too. So pay attention, right? See, look at how many cycles my 15-minute went through during this measure move, during the same time frame. Look at how many cycles. So this is how you end up with a measure move. Look at how many cycles. Look at how many cycles that, you know, look how many cycles, you know, my 30-minute went through. It really went through one good one, had a little pullback or what have you. And then, so that's this move right here. That's just what it's called. Like it's just what they named it, you know. I can't give it no more description than that. So, and then you have this right here. So, and then the hour just did one dip, and then as soon as the hour came out, it just dropped. So once so the stochastic is still going to cycle through. It has to cycle through, and once it cycles through, and now it's going to drop. And that's so so you can see that you have the fundamentals are there along. I mean, we're in the fundamentals, but even in those fundamentals, right, you still have your technical analysis trying to play out, right? So even in the fundamentals, my technical analysis is still trying to play out. So, you know, that's what it was. Unless, you know, like if something happened, well, we'll take it over. Like earlier, the CDC spoke. When the CDC spoke, voila. When that's when the market started doing that shift. You know, so you have kind of got a few things that were going on in there in the whole grand scheme of things. So any questions before I move to the BYOB cash out to kind of show you all how to trade the BYOB cash out? Do I have any questions? Questions, comments, concerns? And not skipping the BYOB question, but I'm gonna answer that question when we get to the BYOB cash out. Oh, how did I do that? I just double tapped on the screen and it'll go away. Yeah, just double tap on the screen. All right. Gold is not gonna, gold is just at an all-time high. Like gold is just at an all-time high. Well, gold kind of pulled back some. Actually, gold did pull back. Hopefully that gave you a clear understanding. So gold is really at an all-time high since, I mean, it's gonna be the same thing though. So I'm actually have to go, you know, gold, I think it was what, 2012 since, yep, 2012. So you got to come over here to get your your high points all the way back to 2012 to get your high points, all the way back to 2012. So just to kind of drop a few, right? And honestly, I shouldn't have did that. It probably wouldn't matter right now. Honestly, I always come to a line chart to kind of, you can kind of see. So, to get my look left points, you kind of really gotta, and for gold, you have to have them for gold. Gold will bounce around like a ping pong ball, right? Gold would definitely bounce around like a ping pong ball. So, and I should have dropped it a little lower, but we just gonna go with this right here. Oh no, don't say that, Joan. So I'm gonna pull over just a little bit. So let me see. I'm gonna pull some down just a little bit. See, and gold was predicted to go to about 1,700, and gold was rising, but they started pulling money out of everything. So, and Bitcoin dropped. Do I have it up here too? So Bitcoin even dropped, and normally gold and Bitcoin is a safe haven when gold and Bitcoin is a safe haven when you pulling out of the US 30, or pulling it out, and you can kind of see what Bitcoin did. Bitcoin took a nice drop, and Bitcoin had reached the $10,000 mark. So when you're talking about everything across the board, right? You're talking about everything across the board. Yeah, it is. It is supposed to rise. So nothing is doing the normal. So you cannot say, oh, this is what's supposed to happen right now, because even typically when the US 30 goes down, gold typically rises. And as you can see, gold is selling, US 30 is selling, NAS is selling, Bitcoin is selling. I'm like, where did y'all put your money in? A mattress? Where is it at? So you just took it out and kept it. So, where is it at? So it's like nothing is doing what it's supposed to do. So, and you can kind of see, so you really want to understand what's happening as you trade it. So you could have cashed out on this today as well and made significant profits since this drop, if you understand. And that's why I say, when you understand and you tune into the financial news and you utilize the tools, because oh, it did pull up for me, because earlier I wasn't even paying attention because my internet was acting crazy and it wouldn't pull up. So it just started pulling up with this call. So I wasn't even paying attention because I wanted to show you how even with this is still kind of pulling on it and working, but I definitely want to get a minute to kind of show you the BYOB cash out. So you can kind of see how gold was on that incline, and in the day it kind of pulled back some, because these are the daily candles, and you can kind of see where it pulled, but you can also see where it's on there. And then you also, with gold though, and you say gold, just kind of highlighting your point to gold, is you want to understand the trend of the market when you trade gold, because gold, like, I would even have more support and resistance lines in here. And that's my comfort zone. You got to find yours as you trade it, because gold will bounce like a ping pong ball. Like, gold just will bounce on you. It will bounce off of these lines. And so, and that goes back to what I was saying before about developing and having a relationship with the market. Have a relationship with what you trade. So trade it in your demo account until you understand and you know how to trade it, right? So, you kind of want to make sure that you put that in your demo account so you know how to trade it, because this one bounces and it can be absolutely nothing wrong. But like, let's say if this was gold and gold would have hit this line, then gold would have spiked down. So like, let's say you would have been in a buy right here on a gold and gold would have hit this, it would have just went down. And that's how Bitcoin trades as well. So you notice that, for example, Bitcoin does the exact same thing. It lines up, and it's nothing happened. It's no news. It's no any of that. It's like once it lines up and it gets ready to go, it hits that support or resistance line and it shoots. You see that line right there? It will go, and it's nothing wrong. It's just the fact that it will push off of the line because everything lined up in confluence. So and that's just how it trades. So and that's just you developing a relationship with those currency pairs. And so that's how gold does as well. And so people will be, I'll see the comments, oh my God, what happened? What did gold just do? Nothing. It got confluence, and it got its confluence and it went. And so that's why you don't want to trade against the trend on something. So I don't want to trade against the trend on gold. I don't want to trade against the trend on Bitcoin. You know, like even with this US 30 kind of thing, you know, you kind of want to stay understanding what's going on with the trend and what's happening. And that's why, you know, with US 30 under normal circumstances and normal market conditions, yeah, y'all can scalp that all day long and eat well, you know. But you know, when you got strong fundamentals like we do, you want to respect those fundamentals. No, absolutely not. So no, what you notice on my chart is, oh no, that's old. That's old. What you notice on my chart is what I use. All that's just old. I created the BYOB cash out, so that's just old indicators. And then I turn my thing off. So, so I don't even use a moving average, because if you know what the stochastic is, the moving average is. I see a lot of people want to use that. If you know what the stochastic is, the moving average and the closing price is in the stochastic. So I use my stochastic. I don't like a cluttered chart. These support and resistance lines are enough for me. You know, that's enough for me. I'm like, you get analysis paralysis, and you'll watch your trade pass you by. So, you know, because I used to do that. So I had the pro, I had all that stuff, and now I cut that off. I cut all that stuff off. I'm like, nope, this BYOB cash out, and it's 92%, and I love it. So, thank you. So, and thank you too. And thank you. I'm glad you love it, and I'm glad it's working for you guys. So that's what I was praying about when God blessed me with it. So, so let's talk about what the BYOB cash out is. I promised you all what is the BYOB cash out. So I'm looking for a good setup on here. Talk about the BYOB cash out. So I was asked about other indicators. I was asked about the candles. I was asked about, it got a few questions in here. So let me explain to you all what the BYOB cash out is. And its simplicity. The BYOB cash out uses 3 simple indicators, and that's it. 3 simple indicators, and that's it. So with that being said, it uses the stochastic. It uses the stochastic. Don't go away. Don't run away from me. It uses the stochastic, okay? And this is my stochastic. It uses Hikanashi candles, and it uses a PSAR, which are the dots. The stochastic is literally a momentum indicator, okay? And so just like that question that I just got asked, so understand that in this stochastic, it has the closing price and the moving average. That's why you don't see all that on the chart. So it has this, you know, if you understand price action and your 3 areas of value, it covers all of those. So here I got my stochastic, I got my Hikanashi candles, and I have my PSAR. My Hikanashi candles are trend candles. So I was asked about the candles. I only use Hikanashi candles, period. Japanese candles are the underlying candles. You know, of course, you have to go through and read the candles. There is a training on reading and understanding the Japanese candles on the YouTube channel if you want to take that course. But Now the only candles that I'm using right now are the Hikanashi candles, and that is because they interpret the Japanese candles for you. So the red candles with a flat top means sell. That means that the underlying trend where we are is a sell. Green candles with a flat bottom mean buy, okay? Then what I have is a PSAR. My PSAR is a trailing stop loss. This means that the market has reversed. So that, you know, it's a trailing stop loss, and it's a reversal in the market. So I need all three of these indicators for a valid trade setup. Now, with that being said, the first indicator that I use is the stochastic. Why is that? The stochastic is a leading indicator. These other two indicators are lagging indicators. So that means that these will come after my stochastic. My stochastic determines if it's a buy or a sell. If it's around, you see these numbers that run along the side of the chart. 0 to 100, 0 to 100 is where the numbers run. Now, if it's at the 20, I'm looking for a buy. If it's around the 80, I'm looking for a sell. The key with that, though, the key with that is, because I mentioned 0 to 100 for a reason. The key with that is this crossover, okay? This crossover, this crossover, this crossover. It must cross over. So the key with this is this crossover. So the blue line cross over the red in a downward momentum. So you notice that this is at the 80, around this 80, the blue line cross over the red in a downward momentum, okay? Blue line cross over the red in a downward momentum. I got a red candle. Once this identifies a sell. So if I was here, like right here, you notice that I'm around the 80. I'm close to the 80, but I do not have a crossover right now. Nothing is crossed over. So it looked like it's beginning a crossover. So that's probably not the best example. So if I was over here, let's just stay over here. I'm on a 15-minute chart. So you notice that right here, I got the blue line cross over the red and a downward momentum. Now I have a red candle with a flat top, because once I identify that I'm looking for a sell, now I also need to identify that I'm looking for sell setups, meaning that I've identified I'm looking for a sell. That means that now I'm looking for a red candle with a flat top and a PSAR on the top. So my crossovers at the top, candle at the flat on the top, PSAR on the top, right? So you notice that I had to wait a little while for it. Now, okay, right here we go, right? So I got my crossover, I got my red candle with a flat top, and I have my PSAR at the top, okay? So now I have a valid setup. I have a valid setup. So now that I know that I have a valid setup, and now that I know that I'm ready, then what is next? What I do next is what's called time frame confluence. This in itself is the BYOB cash out. That's it. But what you don't know, because if you were looking at this setup, this is where you would be right here. You don't know how it played out. Okay, that's what you would be looking at. We're looking at this in past time, not real time. So that's why the arrow is there. Please don't go put an arrow on your chart, because this is what you honestly would be looking at. So now I want to use what's called time frame confluence. What time frame confluence does is it helps me identify, it helps me understand where I am with my chart. It helps me. So I want to drop down to my 5 minute, understanding that when I drop down to my 5 minute, okay, when I drop down to my 5 minute, then this needs to still be selling, okay? This needs to still be selling. My 5 minute happens first. My 5 minute happens first, okay? So because my 5 minute happens first, that means that I'm looking for it to have, like my 5 minute happens first, so it needs to sell. So to answer your question, because I know I'm gonna get it. Do the hour need to be this, and do the 5 minute need to be this? The 5 minute feeds the 15. So the 5 minute needs to be selling. The 15 feeds the 30, which feeds the hour, right? So so where we go next, we drop down to the 5, and then we go up to the hour, right? When I go up to the hour for time frame confluence, When I go up to the hour for time frame confluence, if I can find it. When I go up to the hour for time frame confluence, this feeds the 15 feeds the 30, which feeds the hour, which means it needs to look like it's gonna be, it needs to look like, because this is the current swing of the market. That's the higher time frames tell me what the market's doing, not the lower time frames. My lower time frames are just at the movement that's happening. My higher time frames tell me what the market is actually doing. So when I look at my hour, my swing of the market is actually in a sale. You see the red candle? That's what I'm looking at, is that red candle. Knowing that the PSR on the top is a benefit, okay? That's an added bonus. That's a great setup. But I'm looking at that, I'm looking for that red candle. That tells me that the swing of the market is in a sale. Now, for those of you all who like to understand the trend of the market, let's check the 4 hour as well. My 4 hour is in a sale as well. So now I know my hour and my 4 hour both say sell. I understand the trend of the market. So go back down to your 15-minute chart, market execution, market execution, market execution, market execution. And there you have it. That is the BYOB cash out. On the time frame I'm trading on the 15-minute chart. The 15-minute chart is where everything is analyzed and everything is lined up off the 15-minute chart. We just evaluated everything from the 15-minute chart. All right. So, and that, ladies and gentlemen, is the BYOB cash out. That is the BYOB cash out in its simplicity. No other indicators, nothing else to go with it. That's the BYOB cash out in conjunction with time frame confluence. And that is how you grab your 10 pips and cash out. Once you begin to advance to a point of understanding your time, understanding your support and resistance lines and those things, then you can begin to go for more pips. This is not just a scalping strategy. I don't care what your style of trading is. You know, no matter what your style of trading is. Oh, your stop loss. Let me tell you your stop loss. Your stop loss is always above the PSAR. Yep, I would say yes. So your stop loss is always above the PSAR. So your stop loss is always above the PSAR. So, so if you look, it's not on the PSAR, it's above the PSAR. It's not on the PSAR, it's above the PSAR. Okay. So no, you don't, these are trend candles. So as long as you have that flat top, I'm not waiting on the candle to close. These form as is, right? These candles form as is. So when they form and they form with that flat top, you have a solid candle. So that's it. And so it's exactly as I explained it as far as time frame confluence. So you looking for that candle, I'm looking for a sell, so I got that red candle. So don't add anything to it, don't take anything away from it. It'll be exactly as I just explained it. So, all right. So, ladies and gentlemen, I'm gonna stop. We are out of time. I really, really hope tonight was informative for you. I just felt that tonight was a great night to share the information that we just shared with the significant impact that, you know, the coronavirus is having on the market. So we normally see little things here and there that kind of impact the market from a fundamental standpoint. We always see technical analysis, but that's how we trade. That's how we mark up our charts. But the fundamental analysis is, you know, we see a little impact here and there. We check our red folders every morning, every time we get ready to trade. But this is probably, you know, this is definitely the most this is definitely the most impact I've seen. You know, Brexit has some impact, but, you know, that lasted a moment, and then it was over. So, you know, we have a little bit plugs here and there, but nothing to this nature. And I really wanted you guys to understand, you know, how fundamentals can impact the market, because they're very important as well. And I want you to pay attention to them, because we're always telling you to cut on Bloomberg. We're always telling you to cut off the news. And now you should understand why. So it's so important. It's so, so very important. So with that being said, ladies and gentlemen, with that